It has indeed been rising on the global market. It has become the safe haven for most investors around the world, looking at the uncertainties around the global market. But some have argued that looking at what has happened to the price of this commodity, it is fair to tax those who are in this space more to help grow the economy, just like what is said when it comes to taxes. The more you earn, the more you pay. Tax the rich to pay the poor. So if indeed gold prices are doing wonderful in the international market, well, is it right for government to go into this space and ensure that we get more from this commodity, from this economy? Well, on PM Express Business Edition, we'll be turning the light on the gold industry, the current state and the economy, the rising prices of gold on the international market, and whether indeed the time is now to ensure that as an economy, as a country, we get more from this precious metal. Well, on PM Express Business Edition, we're talking gold, we're talking about prices, we're talking about the economy, we're talking about the companies or mining firms in this space and whether we should be getting more from them. We'll be engaging the Chief Executive of the Ghana Chamber of Mines, Kenneth Ashigbey, is here with me in the studio as we talk gold and we talk about price. But before we get in deep into this discussion, let's play on some numbers on the screen for our viewers. So look at the prices of gold since 1973, and it has just been rising, even though we've seen some blips before. It appears that the rally would just not be ending anytime soon. $5,277 an ounce of gold. Whoa! And some are saying that, well, it has just started. So let's look at in terms of trend in Ghana's gold exports. If you look at the graphs, the boom, and obviously you could see that yes, where the prices are kind of interesting. And my distinguished guest in studio will educate me more. You've seen the spike in the export of gold. According to the Bank of Ghana numbers, last year we exported more than $20 billion in terms of gold to the international market. And the graphs gives us more of a better perspective. So this is talk about various proposal that was put forward for the country to benefit from the sector. One can talk about the JEPA royalties and what we also have now. Some will say whether what we have now is way, way better than what had been put forward initially in terms of what do we do as a country to benefit more from this precious metal. Okay, so those are some numbers in there. And in studio here, I'll be engaging the Chief Executive of the Chamber of Mines, the Kenneth Ashigbey, is here with me in studio. But before we get into a deeper analysis, we'll take a short break and we'll be right back after these commercials. Welcome back to PM Express Business Edition as we talk about mining, the economy, and companies operating in this space. And indeed, I'm grateful to have the Chief Executive of the Ghana Chamber of Mines in studio with me here. I call him Uncle Ken, and it's been a long while.
It's a whole year.
And how have you been doing?
Very good, very good. The Lord has been good to us, yes.
I mean, can I say that indeed it is a good time to be a mining firm?
Well, I think generally, the mining environment, based on the rallies that we're beginning to see, it's definitely very interesting times. And, if you look at the numbers that are coming in terms of the large-scale mines, we really have not been able to increase production that much out of the approximately 6 million ounces that we've done as a country. The small-scale sector is estimated to have done 3.1. Of that. And the interesting thing again is that we've seen prices of gold go up, which definitely then enables, the margins get healthier, but also it's that particular time that you are able to bring in low-grade ore in, particular grades that you are not mining in the past. So all of that is also happening. But again, in as much as, the production is going up, you also have investor decisions being cautious, and the reasons are not far-fetched. This is a time where, government itself There is the revision of the mining policy. There's a revision of the Mining Act. We've seen some mining audits go on. We've seen government talk about the increases in, the sliding scale being introduced. So all of these, new policy initiatives that are coming also brings those, uncertainties, and so then investors are looking at it. Yeah, prices of gold are go, but where are we going to go? So there's a wait and see attitude that's going on. But fortunately, there's engagement going on with the government, and so that we're trying to, assure investors of the fact that there's going to be some certainty, and it's important that when we make the point about investors, we need to bear in mind that this is not only foreign investors. There are situations where you take, for example, an Adamos. Adamos is a wholly owned Ghanaian mine. They are at the point of investing to be able to expand their mine. We know Azuma, for example. There's also that conversation going on. You take companies like Asante. Asante has, a significant Ghanaian investment in there. And so there's all of that wait and see that is happening. But as I said, the good thing is that there's this engagement that is continuing with government. And we're hoping, because what you want to do is that as the prices of gold surges at this stage, you want to be able to expand your output so that government gets to benefit, the investor gets to benefit, workers gets to a lot more jobs get to be created. Because you see, as you are starting, you're talking about the fact that as price of gold goes up, you want to make sure government, but at the point where the prices of gold was $2,500 per ounce, government, if let's say government made $1 billion in terms of royalties, today that the price of gold is over, as at 3 p.m. it's around 5,000, almost 200. Yeah. So immediately, without even changing your royalties, what has happened is that you've doubled,
what you're getting,
the quantum that you're getting.
I'll be coming more to the price issue, but I still want to expand to look at the current state of the industry as we speak right now. Is it doing well? Is it challenging? Is it interesting? Is it more uncertain because of the plan to review the whole fiscal regime for the sector coming from government?
Well, I think one of the things that we need to see, one of the positive things that have happened, and we commend His Excellency the President, the Minister of Finance, and the Minister of Lands and Natural Resources for it, is the fact that government took off VAT on exploration. You see, a lot of the mining that we're seeing are explorations that have been done in the past. But then what then tended to happen in Ghana is that if you brought $1 billion to do, $1 million to do exploration in Ghana, you only had about 780 million. If it was, you had 78% of that amount for your exploration because VAT was taking about 22%. And so because of that single move that government made when they read the budget, it's already signaled to the market that we're ready for investment. But then on the back of that, with all the uncertainties around the review of the Mining Act, the policies and all of that, that is the challenge. But it's also then within an environment when prices are, are increasing. So it's a good time, but it could be better, definitely for everybody. And as I say, because of the conversation and engagements that are getting on with government, our hope is that we should be able to take advantage of this particular rising prices to be able to expand, to be able to employ a lot more people, to be able to generate a lot more revenue. And our ask in all of this is that, and that's why for some of us, the whole conversation about the same way we have the Petroleum Revenue Management Act, we should also be having the Minerals Revenue Management Act, so that in these good times, we should be able to keep a war chest so that tomorrow, when we are in a difficult situation, we then are able to. So, yes, definitely these are good times.
Let's look at the bit about the VAT you spoke about on exploration and how that has impacted immediately on investment decisions and realigning of investment and portfolio management and all those things when it comes to the sector. How has that immediately impacted on decisions of your members when it comes to new explorations to expand their space that they are working?
Well, so definitely that is a positive sign. It's definitely a positive sign. So, but the thing about mining decisions are the fact that they are long-term in nature. They're also very capital intensive. So people will be taking all of that and factoring that into their decision. And so we know that speaking to our members, people are beginning to be interested in that. In the past, you had a lot of these large-scale mining firms having their own exploration and prospecting companies who were doing a lot of prospecting.
Yeah.
So our hope is that we will be able to see a resurgence of that. But it's not only the issue of VATs that are going to happen. The other challenges within that we're talking to the ministry about is, how quickly we are able to get approvals so far as these, when these exploration licenses, some of them, they are permits that might have expired and need to be renewed. It takes too long. And so we need to work on some of these bottlenecks. Because, the interesting thing is that you find out that our neighboring countries, you take the Côte d'Ivoire, you take the likes of Mali, you take the Guinea and all of that. In terms of, if you look at the heat map so far as exploration dollars are concerned, there's a lot more movement going back into those spaces. So our hope is that with this decision that have been taken, we will be able to reverse that and be able to get some more, funds coming into exploration in Ghana. But it has to be accompanied with some, dealing with some of the bureaucratic bottlenecks that are in the system. Then there are also challenges with even securing, once you have exploration licenses, getting access to the land itself, some of the challenges that we experience on that. And some of that is even linked with the illegal mining. There was a situation where there was companies that have been doing exploration for years, almost close to a decade. You had people, illegal miners, get into the particular space, and then all the investment that they've done, gets compromised. And so this is positive. And there are other things that we need to do with it, because you see, the mining that we're going to do in the next 5 to 10 years is going to be dependent on the exploration that we're also going to be able to do at this particular time. And I'm also just hoping that as the price of gold is going up and all of that, and you saw the numbers that that we're able to sell, a lot more of that was small-scale gold, and a lot more of that was gold that was sold by the Goldbod, together with the Bank of Ghana. Some of that revenues that are coming, the hope is that government would also be able to put that, part of that money into exploration. So when we as a people know what exactly it is that we have, then when you get into negotiations, whether it's local investors or with foreign investors, because you know what you have, then what you also get in return for any investment somebody is getting gets to improve. So this is the time where, if you look into the NDC manifesto, you look into the MPP manifesto, they all talk about the issues of exploration. If we did that also very well, and we make sure that the Geological Survey Authority were giving them some resources, even our small-scale miners who do a lot of the trimaquare, with all the challenges, we could resolve that if we're exploring the land and they know the nature of the ore body that they're dealing with. It then would make sure that even in terms of our small-scale mining, that can also be done in a responsible manner, and then we'll be able to extract more benefit out of that.
You mentioned regulatory engagement, and I'll be coming to the royalty bit about when recently you had to issue a statement on this fiscal regime review and all the rest. I mean, do I get from you that you are having some challenges with regulators in terms of approval? Because I thought that this industry had been quite old, engaging members who have been in this space for sometimes over 10 years, over 20 years. So what has been the challenge there in terms of those regulatory approvals and getting things done that I find it very interesting, some would say? Well,
so again, one of the issues is that you need to deal with the regulator, you need to deal with the policymakers. Some of and again, definitely Ghana is a lot more matured, our regulation policy matured, but there are some challenges. You find out that the French especially are a lot more efficient when it comes to dealing with some of these practices. So there are some challenges. You have a permit that that has to be renewed, and the whole processes. There are a lot of if you take prospecting licenses that were on the table of the minister, because the minister has to sign it. Of the former minister. When this minister came and the whole processes had to start again. And so some of those are some of the challenges that you face. You as somebody who holds a prospecting license, you're sure that this is going to be signed. But the investor is not going to, when they do their compliance checks, and that particular permit has not been signed by the minister, because of that, the revenues that have to be released, the investment that have to be released to you to be able to do your work gets to suffer. So these are things that we're working together with the Minerals Commission, working together with the ministry, working together with the likes of the EPA. You know, the mining industry is really very heavily regulated. There are various regulatory players in there that we need to work together with them to be able to improve it. Let me give you a typical example, and it's one of the things that the Minister for Finance and then the Minister for Lands and Natural Resources is dealing with the issues around Galamsey coming in and the challenges with excavators. So a process was put together to make sure that, you know, no excavator would be taken into mining which will not be tracked or will not know where it is. What that has done is that it's also created a bottleneck where some, large-scale mines and their excavators are not the excavators that you use for Galamsey, but some of them had suffered it, and that's what I'm saying, unfortunately, and it's then resulted in a lot of demurrage. You know, the interesting thing, demurrage, you know, cash does not go to the government. And so the Minister for Finance, for example, has taken upon himself to see how he's going to be able to work. And our appeal is to the Minister for Transport, because he also has to work together with the Minister for Lands and Natural Resources and the Minister for Finance to be able to ensure that these excavators get to be, dealt expeditiously. And so these are some of the things. And it's an ongoing conversation that we need to have.
5,200 and counting. It is a good time to be a mining firm. Rising prices of gold on the international market. What does association make of this spike?
Well, I think it's interesting, you know, because if you look at, we've recorded, heights that we've not seen. I was just looking at the Reuters numbers today, and spot gold had gone down by about 4.6, recording about $5,149 per ounce at 1548 GMT. It had earlier touched 5,594. And so, yes, all of this is being driven by safe haven demands, currency dynamics, global geopolitical uncertainties. You know, today there was this whole conversation about Trump and Iran having to sign a nuclear deal. And then Iran also saying no, and all of that. All of those things heighten the challenges that are there. And so the prices have remained volatile and increasing. But we are not, oblivious of the fact that, and again, as you showed in your charts, this is cyclical. And definitely, how long this particular rise is going to go are things that we're looking at. But it's definitely an interesting time for the industry, and we need to find ways in which we are able to take advantage of it. As I was saying to you, these are times where you want to ordinarily make sure that your mining firms are expanding their output so that you're able to benefit. These are times where you have some particular ore bodies that the quality of the ores are so low that people will not have mined them when your prices were around the 2,000, 3,000. These are times to be able to bring them in. And once you're doing that, those projects would bring some investment in. Those projects will mean you needing a lot more people to be employed. Those projects will mean a lot more local procurement. Those projects will mean contractors getting jobs done. And by exchange, it then leads to, increased output for this country. But then also, it's important also to link this and say that as prices of gold spike up, it drags some of the inputs with them. So your cost of explosives, all of the inputs that you need, that also goes up. So it is not as if as the prices go, everything gets to sit in your margins. And then there's another challenge with mining. Mining is such a very capital intensive, and your ability to expand your processing plants and all of that, there's a lead time. So it will take a while for you to be able to catch up with the increases that are going on. So it's the reason why you find out that even in 2024 compared to 2025 compared to 2024, though the prices have generally been good in 2025, you found out that, production did not go up. The large-scale production did not go up.
But Uncle Ken, I'm just trying to get some understanding from you. Do I get from you that even though gold prices are going up, the impact on the firms are a little bit minimal? Some will struggle to connect. That's
not the point I'm making. Definitely,
that you guys, it has been good on the mining firms.
No, definitely, it would be good on the mining firms. It's good on government, because you see the thing.
Let's deal with the mining firms for now. You see, that in terms of how this rally has impacted on your operations and all those things.
I'm saying that you are selling gold at a particular price. The price of gold has increased to another spot. Definitely, if you are a mining firm who is selling spot, definitely you would take advantage of the price of gold currently as we speak. But you should bear in mind that there are some of the mining firms that, based on investment decisions that they have made, they are still, though today price of gold is at 5,000, they are selling gold at some other price. But anybody else who is doing the business, whether it's large scale, small scale, is definitely benefiting out of. So when you did a graph and you saw all of the value of export that we have done, it's not all of that is volume. And some of that is also coming from the margin. So it cannot be, nobody can run away from the fact that, yes, it's beneficial. And it's definitely for anybody who is doing this business. You want to make sure that, you are happy when prices go up. But the most important thing that you want is some stability. And we all know that the spike that we're seeing is not a spike that is going to last long.
But the argument also I get from some of your members is that despite the prices going up, your input costs have shot up.
It is natural. It drags it with it. Because you see...
Educate me.
So you see, what is going to happen is that as prices of gold goes up, the issues about the import is also a product of demand and supply. And it's not your jurisdiction alone that would want to be able to produce. Other people are going to produce. The people who produce your input, issues like your grinding media, issues like your explosive. Currently, it's even said that activated carbon itself, the supply is short. So once the supply is short and there's a lot of demand coming because people want to produce a lot more, it would mean that the prices of those inputs would also drag up. So, and again, I'm not saying that the marginal return of the increase in price is not positive. It is positive, but definitely there's a bit of the margin that gets eaten. Even labor as well. Definitely labor would also be asking, and it's natural that if your prices are going up, you need to pay your
Isn't that locked up in collective bargaining agreement?
No,
or there's a different thing for the mining firms?
The agreement is not silent on the fact that when you as a company are making more profit, definitely there are incentives in terms of remuneration, there are packages that are tied to your output. So when you're producing, you're becoming more profitable, you're happy. And it's for us as a mining industry, is the reason why we're happy to be able to discuss, a share of, the spoils of mining that is tied to profitability. So as you've taken care of, all the costs, the rising costs, you would want to then make sure that the profits that are coming, so typically Cote d'Ivoire, for example, when government was talking about increasing their royalties, one of the options that the Chamber of Mines for Cote d'Ivoire was offering was for the fact that let's take care of all the cost. Then for government, we can decide that we'll share the spoils of it. And so those for us are better ways. Then it's more effective, though. Then what it then does also is that you take the example of Egypt, for example. So everybody is pushing for outputs to go, for profits to go, because both government and the investor, the worker, everybody knows that they are tied to the performances that they are going to do. So that unlike the Ghanaian situation, where if you take your growth and sustainability levy, you take the issues around your royalties, it's all at your revenue. It's at the gross level. So it's not at the profit level. So sometimes when people talk about it's only 5% we're getting, it's 5% of, so if you have a mine where you just begun and you're even making losses, it is still 5% of the revenues that you make. That's why for us, in times like this, where there's a windfall, you are better off making sure that you are doing a good share of, the windfalls that are coming, so that all the factors of production also get to benefit.
You talked about the labor also pushing for more. Do I get from you that some of the mining firms or some of your members are helping labor or workers to benefit from what is happening? Or is the whole argument about, we borrow these monies, investor shareholders first and all those things. So you realize that when these things are happening, the human capital is not benefiting from these spikes.
No. It can, you see, again, within the mining industry, I came from the telecom industry to mining. In the telecom, we compete for customers.
Yeah.
When you get into the mining firms, they compete for talent. You see? And so you definitely, as a mining firm, you want to make sure you're incentivizing, the people who work for you. So definitely at this stage where, prices of gold are good, you want to make sure that the critical people who would be the machines are not going to drive your output for you. It's going to be the people. So
AI is not
definitely
doing the job for
it is a conversation that is going on, and definitely labor has to benefit from what is happening. It's not only just the investor, it's not only just government, but labor also has to benefit from it, and it's happening.
There's also a school of thought that when industries are doing well, the commodity base for their operations is doing well, and it's impacting on their operations. Obviously, in terms of taxes, they have to pay more.
Right.
There's a push by various industry watchers, and they're saying that, okay, if this is happening, can we go back and review the agreement and get more from the sector? Some of your members are not happy with some of these discussions.
Well, again, it's not just some of our members. It's
the chamber.
It's not just the chamber. It's generally something that cuts, So yes, and for us at the chamber, we completely agree that the fact that government and the state should be able to extract a lot more rent out of the output that is happening. Is the reason why when it came to the conversations around the sliding scale, for example, we were not averse to that. The only thing that we're asking is that, how are you sliding? At what point are you sliding? And you should also bear in mind, as I said to you, beyond your 5%, which is a percentage point of whatever you're getting. So as prices go up, and the price times volume becomes the amount of which you're getting the percentage, you also go up. You should bear in mind that in Ghana, we have a 3% GSL, Growth and Sustainability Levy, which is not tax deductible. So if you translate it into royalties, it's about 4.6%, which then means that your royalty is around 7, the 5 plus the 4 point, so 9.6% already. And you are also in a situation where you pay 35% as corporate income taxes. This is we're a country also that has 10% free carried interest, so far as government is concerned. So if there are dividends that are going to be paid, government is entitled to that 10%. And then for every dividend you pay, there's withholding taxes on it. So when you take our average effective tax rate already in Ghana, our average effective tax rate is really quite high. So what we are saying is that as government wants to get more out of this, we need to ensure that government is going to get sustainable incomes going forward, and that the unintended consequences of wanting to get more when you have a short-term phenomenon happen does not then go to endanger your long-term sustainable conversation. So what we are saying, and again, fortunately for us, we continue to have engagement. Recently, this week, we had a breakfast with the Minister for Lands and Natural Resources and Minister for Finance, and we're doing this. What we need to do is to find a sweet spot that enables government to get a lot more revenue, a lot more income going forward, and enables the mining firms to also be able to continue to expand. You don't want to jeopardize, because the thing about it again is that we have a lot of our mining firms that are relatively matured mines, and so they need to spend a lot of money to be able to extend their life of mine. They need to spend a lot of money, to be able to make sure that they are able to. And so there are new investments that are coming in, and some of these investments are investments that have been done, when your royalty, with computation of royalty rates of 5% and all of that, So you want to make sure that you don't jeopardize some of these new projects that are coming. You don't want to jeopardize some of these expansions that are coming. So our conversations around all of this is to say that, yes, government needs to earn more, but we need to make sure that we don't risk, reduction of cash flows. We don't risk the MPVs being negative, IRRs suffering, and shortening the life of mine. Because you see, what happens is that because the mining operations are very long-term in nature and things are locked in, when you introduce fiscal policies that are not favorable, what then will happen is that, yes, some investments might hold on, some investments might go away, but those who are in, then what they will start doing is high grading, and then, it would then sterilize some of the ore that you could have also mined. That would happen, and then it will shorten your life of mine. And then the other interesting thing is that it's the matured and cost-intensive mines that are disproportionately affected. So we are open to even getting independent parties. We could take a lead from what Cote d'Ivoire did when the government wanted to increase. What the chamber did was then engage Ernst & Young, which then looked at it. We have done our numbers, and we know that when you go into the MINCOM and all of that, they have mineral economists. When you go into the ministries, they're experts, and we can all sit around the table and find out what is the sweet spot that enables all factors of production on a sustainable basis to be able to...
How true was a report on the wires about government bringing in an external party to look at your numbers in terms of what you've been churning out, and I stand to be corrected?
No,
is
so again, this is the Minerals Commission doing an audit, and Minerals Commission...
Of your profits?
It's basically of all operations,
Your operations.
Exactly, but the interesting thing is that
But why an external party now to...
No, so it's just the Minerals Commission. It's not an external party. It's the Minerals Commission themselves who are doing this, and the laws permits them to be able to do that, and it's something that we're open to.
Is it because they are concerned about what you've been reporting?
Well, again,
Or some of your members are reporting?
No. Again, you see, because the thing about it is that the Minerals Commission, all of these reports are already with them.
Yeah.
They audit already. You have several people who look at these numbers on a constant basis. But when the commission says they want to go back and look at it, all of that, we for us were open because it's an open book. You see, the interesting thing about mining, and it's not even just mining. It's a conversation that I've had with those who know. This business is a business where most of them, the owners of this businesses, don't sit in Ghana. Currently, when you take Ghana, for example, 99.4% of the mines are, the people, the workforce are Ghanaian. Even if you take a company like Adamos, which is owned by a Ghanaian, or you take EMP now, if Azuma, for example, happens, you're not going to have, my brother, Ibrahim sitting at the top. So revenue assurance is very important. And for companies that are listed on the stock exchange, then if there are a lot of people on it, so they want to be sure that for every ounce of gold that is sold, the profits that are coming are properly accounted for. So there's no way
nobody is shortchanging anyone.
If you are able to shortchange government
to reduce your tax exposure.
If you shortchange government in terms of taxes, then what are you doing to the shareholder in terms of his dividend? You get what I mean? So the issues, and again, now ESG is now a balance sheet item. So, and within ESG is the issue of governance. So the issues of governance is something that the mining firms already take very seriously. So that's why we welcome it. It's something that we welcome. The thing that has to be done, it has to be done openly and all of that.
Uncle, let's look at the rising prices argument here again. And from your submission, I get from you that, you are for tax payments and all the rest, but a sustainable thing. Some are saying that make hay whilst the sun is shining. Let's get more now the prices are up. When it goes down, obviously it scales back again. So what is the concern about, let's look at sustainable this? But government is saying that whilst the fire is hot now, let me cook everything right now. What is the concern of the place about a sustainable taxes when the argument is that if the mining firms are making more now because of the global spike, let's go in and review these taxes and let's get more right now?
You see, again, in our local parlance. Even before George, we all went to school. What's it better than? Is it that or then? Oh yes, you know. So eating on the constant and the continual basis is better than that. We cannot have an Esau mentality where what we then say is that okay. And again, you see, we should bear in mind, and it's something that the Minister for Lands and then the Minister for Finance agreed with us. This phenomenon is a short-term phenomenon. You don't take decisions that are long-term in nature just based on the phenomenon. So what you want to do is that you want to ride this particular wave in such a way that it will be able to extend you, but it would also continue to oil the rope. So we are all open for fair taxation. That is something that we are not arguing about. So when you look at it, when government, you know, the proposal, the LI came, we made an offer. The counter offer we then made was to say that instead of now you sliding for where you are, slide down to 4%, and slide up all the way to 8%. You know, so we know that we take GSL off, then slide between 4 and 8%, and add 1%. One of the things that we believe should happen is that the people in these mining communities should be able to point also to the fact that when the prices of gold hit the roof where it was, we were able to do this A project, we were able to do B project. So as part of our offer that we made to government was to say that add a 1% that is taken off net profit and put that into a fund that we use for community development. So this is not a chamber that said, you know, you said you're going to do 5 to 12. No, let's just stay there. We have said that let's do a 4, take GSL off, and let's do a 4, 2, 8, and then add that 1% to it. So that when prices come down to a particular 1,900, you then would do a 4, you know, a 4%. So that then in terms of sharing the benefit, it's not that you are only sliding up, but you're sliding both up and down. And then it becomes more equitable. And then it ensures that you are able to keep the wheels running. And also, most importantly, it ensures that at this particular time where the margins are good, where you know the royalties are also good, you are able to make maximum out of it by expanding, you know, your output. Because again, in terms of what you get when you compute royalties, it is the price times your volumes times, you know, the royalty. So if you are able to keep the price up and still keep the royalties up, then you find out that what you would get on a sustainable basis would be better. And another thing that we have also said, in all of this, we, as a country, we tend to do a lit, you know, regulation. This currently, as I mentioned to you, small-scale sector did more than half of what the large-scale sector did. So also bring them into the pool. You know, and I know that the small-scale sector, they are talking about once, you know, the percentages are right, you know, and I know the Minerals Commission is having that engagement. They would also be able to put a bit into the kitty. Then what would then happen is that the policy objective of government wanting to get more, they would be able to take a lot more from the large-scale mines. The small-scale miners would also be able to bring in a bit more. And then all of us as a people would be able to get more, and hopefully, and coupled with that, one of the questions we're also asking is that as things are better now, you know, as a country, what are we doing with the wins that we're getting? Are we also putting aside money for the day where the prices would come down? Are we also putting it into projects? That's what we're happy with government when it talks about the big push would, you know, minerals revenue is going to go into it. But we need to get to the point, and George, I'm repeating this, we need to get to the point where we have a minerals revenue management act that then guarantees that we have something in our stabilization fund, we have something that we're putting there, so that tomorrow, you know, when things are not good. Because you see, the thing that we should bear in mind is that currently, yes, the macros are very good. You know, the CD to the dollar, very good. Inflation trending very well. If you look at interest rate, also trading very well. But all of that is predicated on, apart from the fact that your fiscal policies are good, your monetary policies are good, but it's all predicated on commodity prices. And we've seen we know the way these commodity prices can go, and we also don't have control over it. So for us in the short term, everything looks very good, but we need to be thinking about the medium term. And to be able to do the medium term is to make sure that you're putting money away into places that when things go hard, you're able to recover, but also to make sure that you're putting your money into particular ventures. So when you have a minister for finance, for example, tell you that we're looking into commercial agriculture, how are we moving, the gains that are coming into things like that are a lot more forward-looking. And so those are the conversations that we believe we have. We're not saying that, as a people, we should not benefit out of it, but what we're saying is that let's live and let's live so that everybody gets the...
Uncle Ken, you are worried about this whole taxes and the approach, the fiscal regime review, and the fact that if it's not handled well, it could affect fresh investment into the sector. Are we not overblowing things out of proportion?
No, not at all. Not at all. Yeah, again, but the good thing is that, you see, the ministers of finance and the ministers of lands and natural resources, they get it. They get it.
That if it's not handled well,
yes, exactly.
Where are these investors moving to? Because other countries are also equally taxed.
Yes, but you see, other countries have done it. So you see, again, it's good you talked about other countries.
They're going the same thing. So where are they moving the capital to?
Go to Mongolia.
Yeah.
Go to Mongolia and find out what happened. Look at the issues of Papua New Guinea and find out what happened. You see, even for mining firms that are in Ghana, which are multinational, what would happen is that when you get to your group, people will be looking at where is the best place to place your money. There are Ghanaian firms currently, Ghanaian mining firms that are investing elsewhere in Ghana, because once the physicals are better in another place, it's a zero-sum game. You will find that people would move, capital will move into those particular places. Those, capital that would remain, they will start acting in ways to be able to preserve whatever it is that they are having. So that one, fortunately for us, our policymakers are not oblivious to that. Our regulators are not oblivious to that. The thing, again, is that the various schools of thought. So you need to sit together, and it has to be the numbers.
Because I educate me, Uncle Ken. I mean, you've been in this industry, even not just mining, but several industries before. The argument is that if this argument is being pushed that if we are not careful about this whole royalties review, fiscal regime review, and all the rest, these investors might move away. If you go to other mining giant industries as well around the world, there's this subtle push about governments trying to get more. So maybe the Ghana situation might not be that bad, some would say.
No, but again,
that's why where are these investors moving to?
That's why you want to benchmark. So you want to benchmark with your peers in terms of your maturities and all of that. So you want to look at what are the comparators. So take, for example, Côte d'Ivoire, what's next to us. They are not as mature as we are. There's been a lot of complaint about, their royalties. The cry, you know what it is? Yeah. It's 8%. It's without GSL. Their corporate income tax is around 27%. They have free carried interest about 10. I'm sure, you would get government also tell you about the fact that you have a Tanzanian example where they also have a carried interest of about 10. They are looking at, they also have a sliding scale that high. But again, where are the other players playing in? And you see, the arguments we make in all of this is that it is better for you. So that's why we don't complain about corporate income taxes for the extractives being at 35%. Because then what you have done is that you have accounted for your cost. So once you've accounted for your cost, then you can split it. Another indices that we are talking about is that and these are data that is available, is the fact that when you look at our average effective tax rate, Ghana, the range should be between 40, to your 60, which means that government, in terms of every investment that comes, the portion that is getting to government. Unfortunately, we are hitting above the top. So in terms of the profit share, after you've accounted for your cost and all of that, what goes to government is becoming exceedingly high. And so that's why for us, we're happy that, the ministers and all of that are having conversations with us. And that's why we are prepared as a chamber, as an industry, to be able to get independent persons to look at the numbers. Because see, these numbers, they are global numbers. They are available for us to be able to look at it. And in finding that sweet spot, it should not be sentiment. It should not be where you sit. It should be a round table that we all sit at and say, what is it? What is the best point that when we get, everybody gets to get the
Uncle
best?
Ken, do you think the mining firms in Ghana are being overtaxed?
Well, you see,
based on your argument that you're making, that so then if you are overtaxing these firms, obviously they'll realign their investments. So if I'm a group that I'm in Ghana, Guinea, Ivory Coast, Tanzania, Papua New Indonesia, and all the rest, I may then move the...
No, definitely what you see, what tends to happen is that definitely you would do comparisons. The challenge is not even as much as the level of the taxation, more than the fluctuations that are in it. You know, because you see, you have an industry that is very long-term in nature, very risky in nature. So, and it's very capital intensive. So most of those capital, you would go out to go borrow them. When you go out and you're going to borrow, you would have to do your models. Your models would definitely be then based. You need some level of certainty. So what is the fiscal regime within which that you did your computation based on which the investors gave you capital? Bear in mind, when your fiscal risk is very high, the investors will price that into whatever investment they will give to you. So it's either they give it to you at a very expensive rate, or they might not give it to you at all. So the issues about it is the volatilities of it. So when you have a situation for us as a country where you finish the issues around your budget, and you sealed everything, and then you double your royalties, that is where the problem happens. So all of these fiscal yo-yos, where there's lack of predictability and consistency, that is what the problem is. And again, so we want to make sure that, again, I'm just repeating myself, to say that government should get, and the country should get a fair share of it. But what is the fair share that makes the other factors of production also get their own fair share? And this is a conversation that, we don't do them, talking about them. It's looking at the numbers, crunching the numbers, being to, and the experts in them who are able to do that. And that's why I mentioned that in the Côte d'Ivoire example, they got EY, for example, to do that. We are open to government deciding that, I want to choose any of the top four to be able to look at that for us. And all of us, all the brains, again, that exist, would then be able to then look at it and say, what is the sweet spot so far as this is concerned, that makes sure that government is also able to benefit from this surge, that is going on, which might be short term, but then when prices normalize, government still continues to benefit from it because industry would continue to exist, industry will continue to expand, and again, at this particular point in time where we're getting a lot of Ghanaians also get involved in the industry, how do we make sure that we're taking...
There's a push to scrap this whole stability agreement thing. You think it is a missed opportunity?
It's one of the conversations that we're having with government, about... Again, let me give you a typical example. The reason why you need stability is the point I made. So you would want... Because you're going into an investment, you would want to make sure that what rate, of my taxes am I going to use and all of that. It is the exact reason why we have these cycles is the reason why you want to have a stability agreement. The thing
more of predictability for the mining firms. So
exactly. For all
the whole idea to scrap it, so I think we should be careful about.
No, so definitely the point we have made, and we've made it to government, is that if government thinks that the issues around it, they think that people have abused it and all of that in the past. One of the smartest things that we did as a country when the issues around tax exemptions came, what we then did was to put a framework around it. And, I can tell you for free that the Minister of Finance, for example, talks about the fact that he does not want there to be discretion, that people could then do rent seeking and corruption to abuse. So let's make sure that we have proper KPIs, objective KPIs that are there. That it doesn't matter whether it's Kenneth Ashigbey who is president or it is George who is finance minister and we know each other, we will not be able to abuse it. Because independently we can check and say, and it's the same way with the development agreement. Currently as a country, we're talking about a situation where we want to be able to go into these rare earth minerals, for example. We want to be able to do this integrated bauxite, aluminum. We want to do this iron ore project. some of these will need a lot of money. So let's make it very clear that if you want a DA, or if you want these incentives, it should be tied to performance. It should be tied to the things that you should do. And those things should all be very objectively spelled so that it does not matter. Once you want this, monkeys will play by sizes. So once your size is at this point, this is the incentive that is there. And there should be a lot of transparency so far as that is concerned. And once you can do that, then you also would then put in particular milestones that make sure that, as a country, we also benefit. So, and these tools, in fact, is that these stability agreements, the development agreements, they are tools that are for government. Nobody can force any government to give that DAs out. So what you don't want is that you don't want a situation where you pass a law and then you prescribe that. Then you get an opportunity to be able to, because you have found some rare earth mineral that requires a lot of, let's say, requires 1 billion or 2 billion, and then you don't have, that tool in your toolbox. So that's all that we're saying. We're saying to government that definitely review it. We should not keep the DAs, we should not keep the stability agreements the way they are. We're asking that if it's the length, the tenure of the stability agreement that you're looking at, do a 10 years. Because again, what you want to do is that you want to be able to write our political cycles the way they are.
Over the
and our political cycles have tended to be like 8 years now. That's what historically we have shown that we have done. So you want to write, be able to transcend all of that and go beyond that. And then that then gives you the opportunity to make sure that you're able to attract that level of investment that you need to be able to unlock some of the opportunities.
What do you make of this proposed or plan? Is it more of indigenize the mining space coming from government?
I'm not too sure government.
I hope I'm using that the
I'm
right
not sure
word
government really
to ensure the majority hold by
government wants
Ghanaians
local participation,
Ghanaian ownership in that space.
Ownership.
There are some who are worried that maybe we should tread cautiously as well with that plan.
No, again, for me, it is just the fact that Ghanaian participation is important.
Some are saying it's already there.
Yes, because
so
and I've just
given a subtle push again for that to be realized.
Again,
the people who are working in this space, maybe it's just about the shareholding. It has got to do with bringing in fresh capital. So
definitely,
the more capital you have in that space, obviously ownership will change.
Yes, you see, and so there's nothing wrong in encouraging a lot more Ghanaians, to get into the space. Again, but you see, in defining the space, there's the tendency to look at the space only as mine ownership. But you see, it's an ecosystem, it's a value chain. So for us, we want to encourage ownership of mines, but there are other portions of the mining industry that we want to encourage. A typical example is the issues around local content. But local content has...
Are your members complying?
Yeah, we are complying.
Human capital?
It is something that...
Sourcing of products.
Unfortunately, yes, things. But it is not doing the things that we want to do. So the tendency is because local content says a Ghanaian ownership, you then get a Ghanaian, there is, how do you call it? Grinding media, for example, not even fronting. So he takes the contract, he goes out to go and import and brings it in. You know what we've done? He's only playing in the margins. So maybe he gets a margin of 20%. 80% of all of that is then given, that job is taken out. What we would prefer is to be able to say, we're doing local content, so Ghanaians, or even if it's a foreigner who's come into Ghana, come to establish the factory in Ghana, then that would the jobs that are going to be created are going to be Ghanaian. The issues of profit, they're going to be in here. Then we also, because you have after now, if you take, let me give you a typical example of what we're doing, working together with UMAT. What we are doing is activated carbon. Activated carbon is about $40 million annual budget that the mining sector does. And it's not only the mining sector that uses activated carbon. People who are processing water. Where do you get activated carbon from? Coconut shells, palm kernel shells. Working together with the chamber, funding UMAT, bringing their intellectual capital. There's a professor that has been working with a team that have been able to produce activated carbon out of palm kernel and coconut. And then you know what has happened? The mining firms have tested it and it's worked, you know. And so now you have government strategy that says, I'm pushing commercial agriculture. You have the Minister for Lands and Natural Resources that wants to do reclamation of lands. Can you imagine we could start growing, the palm nut to be able to produce the palm kernels, to be able to produce activated carbon, and then we would be able to sell activated carbon, $40 million to the mines, be able to also export them. The interesting thing I got from the chairperson of our supply chain team is that currently the price of activated carbon is on the rise, and the demand is, the supply is a challenge. So these are the way we believe. And you see, in 2024, I think local content alone was over $3 billion. So how much of that can we let Ghanaians own? And so when we look at the issues about ownership, let's not only look at the issues of just mine ownership. Let's do mine ownership, but let's do other things as well. But as we do that, there is a role for collaboration. We cannot do all of it. Let me give you another example. Goldfields, for example, if you go into Australia, Australia is a more matured mining destination than we are. Goldfields is what? It's an African firm, a South African firm. They own 4 wholly owned mines in Australia. So definitely there's a place for collaboration for other parties to also come in there. But when you say collaboration, then it means we Ghanaians should also be playing in those fields. And in doing that, what you want to do is that you want to make sure you're getting the best Ghanaians to be able to do it. And already we're seeing some Ghanaians, if you go into some of the contract mining firms, there are Ghanaians who are actually delivering, so this can be done very transparently. You see, fiat are not going to be able to deliver these things for you because you do it, it might not be sustainable. But if you get a very, and that's what I'm saying, there are examples of Ghanaians who are doing it already. If you get the best ones to be able to do it, working together with, the top businesses as well, knowledge transfer gets to happen, technology transfer gets to happen, and then we're able to build the ecosystem well.
Uncle Ken, how do we deal with this problem? After years of mining, and the push for all these things is that people still argue and think that in terms of community benefit, go to the Obuasis and the rest, and there are still arguments about the fact that local communities haven't seen the real benefit coming from this mining thing, and not the normal, that is, those CSR activities and all the rest. What do you make of this argument that the push for government in here is that the communities are complaining? The external parties are saying that we don't feel the benefits of mining in these areas. So
again, I think that's a very important point to make. It's the reason why some of us are pushing for the Minerals Revenue Management Act. Let me give you a typical example. The Achim mine was sold for, I think, over $2 billion. Government got $250 million out of that. The question you ask is that the people in Achim, how much of that money did they get? All of that will go into the consolidated fund. So we need to be able to have a way in which our mines, in terms of from central government, also gets to benefit, the communities. So when I get the government talk about the fact that for the big push, revenues from royalties are going to go into there. The mining communities are also part of your country. So if you use that to be able to develop those communities, that would improve. The things, again, is the fact that, and again, I think there's a positive angle to it. If you look at what is beginning to happen, you are having situations where now most of these communities are having foundations. They are having so you talk about corporate social.
That is someone saying that is discretionary.
It's moving. Yeah. It's moving away from being discretionary, where it's only the mines that take decisions, to now the mines and the communities that are now taking decisions. To the extent that there are even some employment. That when the employment opportunities come, the people in the community...
Are indigents benefiting?
They are benefiting.
In terms of employment?
Yes.
We are bringing people from Accra
there's something that in the parlance they call local. Local would mean it's local content, but it's coming from the local community. But we need to be able to do more. That's why for us, for example, we believe that in terms of the corporate social investment policy of government, we need to be able to align that with government's strategic objectives. So that if government wants to make sure that a lot more investment is going to go into infrastructure, a lot more investment is going to go to industrialization, a lot more investment is going to go into education, for example, then for all the various minds, when you sit together with the communities to be able to craft your corporate social, your development projects, it should be aligned with that. So once you get all the communities begin to do that, and it's all aligned, then you are going to make sure that that development is going to happen. It's the reason why our proposal, so far as the sliding scale, for example, is concerned, we're talking about that 1% that you take out of net profits of all the mining firms, put into that particular fund that you'll be able to drive, mining sector specific projects. Let me tell you, the Minister for Lands and Natural Resources, for example, is asking that together with government and the sector, can we build a model hospital, that would be top of the class within these communities. So projects like this are things that you want to see. For us as well, the challenge of transporting cyanide from the Tema port to, say, an Obuasi through the bad roads compared to somebody in Abidjan who would have good roads so far as this transportation becomes a drain on us. So if we're able to fix the infrastructure within our communities, it does not only benefit the people in the community, it's a strategic imperative. And again, because of now ESG is very important, the way you treat your local communities are things that also impact on your share prices and all of that. So we believe that we should be able to work together with government. We should not also be oblivious of the fact that, yes, so you might not have a mine in Accra, for example, but all of us will use the airport to be able to travel. So, and we are not a federal state. So we need to make sure that in sharing the pie, there's some equity in that, but we should also make sure that the communities where these resources are coming.
What are the numbers saying? With all these concerns that have been raised, how is Ghana competitive in the mining global space, i.e. attracting fresh investment over the past 2 years or 3 years?
So again, if you take the issues, so that's why I was saying that,
Are we seeing some 2 or 3 mining firms coming in and so it's okay? I mean, in terms of the global space over the last 3 years till now, how competitive is the Ghana space?
Again, so some of the things, if you want to look at your long-term competitiveness, that's where you start looking at your exploratory investment.
But are we doing well? Are we seeing fresh investments coming?
So you've not seen a lot of that happening. But fortunately for us, the decision that government has taken to take out the VAT, if we're able
deal with that problem.
If we're able to deal with that, with some of the bottlenecks in terms of the permitting and land access and all of that, that should be able to improve it. Because you see, one of the things that we have as a country is our stability, is the peace that are in our country. But when you have the situations where some of the other countries where stability is a challenge, you have military regimes in there, but they are still able to attract, then it should tell you that beyond your peace, there are other things that you're doing that are not helping you to be very competitive. So those are the things that you want to be able to look at and say, again, one of the things to look at for a competitive country is how much exploration are even your major large-scale mines doing. Most of them, you find out that all they will be doing is doing a lot more of the brownfield. But greenfield exploration, very few of that happening. Azuma has done some. There are a few of them. We want to see a lot more of that happening. And I believe that this whole conversation that we're having with government in terms of being able to assure investors, both local and foreign investors, of policy certainty, of the issues around consistency, making sure that the incentives that are put are, very output-based and very objective and all of that. That should be able to help in making sure that
there are some who still question the real impact of mining to this economy and all the rest. And I'll come back to maybe.
George, how do you question that?
I said some. I said some. You remember there are some who even said that let's even scrap mining in the heat of Galamsey and all the rest. Help me out in terms of the numbers here, if not the actual numbers, in terms of the ounces produced, in terms of the taxes, in terms of the retention policy and all the rest. And even for the IMF saying that our recovery right now can be linked to the spike of gold price on the international market. Let's first start with taxes, even for last year. Or
so
again,
with taxes, what we would depend on is the GRA. So GRA is putting all of that together.
But your rough number from the chamber,
we had done 17.7 billion in 2024. Definitely with the volumes that we have seen go up. But again, bear in mind that for the large-scale miners, our output did not go up, but definitely the price went up. So in terms of the quantum of revenue would go up. So taxes would definitely inch up. The challenge we had is that to be able to achieve that, even the 1% that small-scale miners used to pay was taken off. So you would find out that when it comes into the taxes space, the royalty space, the fiscal space, all you'll be seeing is what is coming from, the small-scale sector. Then also is the fact that, there's a retention policy where, some of the mining
You're supposed
firms,
to bring back. Are you doing that?
We're doing over 70%. We're doing over some of the mining
So how much
firms,
did you export to take out then? The 70% of what? I mean, I know if you can get some real numbers, maybe.
So again,
it's still early days yet.
No, it's early days yet.
But you are bringing about 70% of what you. So even if we go back to the 2024 numbers, we can extrapolate to get a fine numbers.
Yes, exactly. You should bear in mind that there's the BOG Forex that we bring back to BOG.
Yeah.
Then there is also Forex.
You are now selling it directly to the commercial banks.
That the BOG says we can sell to the commercial. But
are you doing that?
That's been done. That's been done. And there's also the issues of some particular. So if you take the issues around fuel and you take the issues around energy, government has given the permission for those people to be paid in Forex. When it comes to the issues of your royalties and all of that, those are also paid in Forex. So you will need to bring the Forex back in here to be able to come
and complying with the retention policy as well.
Definitely the retention. And it's the reason for the stability of your city. It's because of the fact that all of this is coming back into the system. That is why this is happening.
What is the relationship between the Chamber of Mines and Goldbod?
Oh, I think it's a very good relationship. The Goldbod, their focus a lot more is on the small scale. But for us, our interest is to help the Goldbod meet its mandate.
I ask this question because there's this concern about power regulations here, about dealing with the Minerals Commission, or even dealing with the Goldbod. And that's why I'm asking.
No, so for us,
is there any clarity when it comes to
the Goldbod
to answer to when it comes to the Minerals Commission and the Goldbod?
Minerals Commission is the one we as large-scale miners we deal with. But the Goldbod, we have an interest in the way the Goldbod works, because for us, this whole conversation about beneficiation and the whole issues around refinery, for example, we want to be able to help the Goldbod to be able to make sure that our refineries in Ghana are LBMA certified. If you do that, what then tends to happen is that responsible sourcing happens. The whole issues about responsible mining also is able to happen. So we have a very cordial. You remember that at the Goldbod when they're signing the agreement with Gold Coast Refinery, I was there. And then for us, even as an industry, some of the things that the Goldbod wanted to do with refinery, we had already visited these mining firms. So, we work according to the law. We work according to, the way it ought to go. And
because there's an argument also about where it is seen as a regulator and then a player. Your mining firms are playing this space. Have you been able to draw the line between the argument about it being a player and in one breath also a regulator in your relationship with the mining firms?
So again, in terms of, if you look at the way the Goldbod law is even, in terms of the gold that we may sell, it's a may. It's a may. Most of
the gold, obliged to
mostly it's a may. It's the Bank of Ghana that we're obliged to be able to sell.
And you are doing that.
And we do that. And again, I'm saying that so far as we are concerned, we believe that the Goldbod has a role to play. We believe that we should be able to support the Goldbod in playing the roles that it needs to play. And I think generally it's been a very good relationship. The CEO is...
You've not struggled in drawing the line between the regulator, the player,
the chamber,
and also dealing with the Minerals Commission.
The chamber sits on the Goldbod board. The chamber has a representation on the Goldbod board. Our primary regulator is the Minerals Commission, and that's that's very clear. You know, the mining sector is regulated by laws and all of that, and so we play within the laws. And I think that, you know, whatever challenges that are there, you know, the law, you know, provides the clear boundaries.
And your members in the chamber is clear on that. That there
we
are
clear. We are clear of what the rules are. It's the only reason why you would find out that one of, you know, the chamber has a representation on the Goldbod, and we take that very seriously.
Do you think that the sector is over-regulated? I mean, when you are dealing with minerals that could wipe away an entire community, yes, some are saying that it is right, but you cannot even to dot an I, you need to get a permission for that, to cross a T.
Yeah,
and
I think
some fear about it stifling innovation and production and all those things. That is that a concern for you?
I think that, you know, Ghana is matured so far as our industry is concerned, and so the issue, our regulation is also maturing. You know, there are a lot of regulators that are in the space. Unfortunately for us, there's constant engagement to see how you improve regulation. So you would want to make sure that there's not overbearance. You would want to also make sure that there's a lot of certainty, there's a lot of clarity. So I would not say, so yes, that's some improvement that we can have so far as regulation is concerned, how you're dealing with your water, you know, the Water Resources Commission, your EPA, Minerals Commission, your GRA, and all of that. But I think generally, you know, what has characterized the relationship, again, is the fact that there's a lot of engagement so far as our engagement with the regulators are concerned. There's so much that we do together, you know, with the regulators. So it's not, when issues come, you know, like the same way you have the mouth and the teeth, you know, they are in the same space, but they get to find ways in which they coexist. When issues come, we're able to sit together with them. Unfortunately, because of, you know, our jurisprudence, you know, the laws that are in place and all of that, we all tend to play within that. Can we improve it with technology, with all the technology that is coming? Can we use that technology to reform, to refine our regulation in such a way that, you know, the Minerals Commission was thought of to become a one-stop shop, so that when you want to come into the space, you don't have to move from here and move to move to another place. Can we get to a point where we have a platform where, you know, all the regulators are plugged in, such that when I submit my request for a particular permit, you know, it's able to be dealt with, and the next person will be able to see it and do it, so we can shorten the time. Those are conversations that we have, because again, the ease of doing business, the regulatory pressure, so far as that, you know, the industry is concerned, it's something that we should be improving on. It has to be a Kaizen. It's something that on a constant basis we're improving, because now you have AI, you have all digital transformation and all of that. We cannot be doing the regulation we did in the 1G era at the time where you're doing 5G, 6G, and all of that. So we need to be improving as we go along.
Let's look at the fact that, I mean, do we still hold the record, or the numbers have changed now in terms of us being the top producer of gold?
We are the top producer of gold in Africa.
And the fact is that, and again, educate me, the majority of these ounces that we are producing is coming from the small scale.
Yes, small scale.
What is happening to the big firms? I mean, is it the turnaround, or is it the regulation?
So,
how much are we able to produce last in terms of ounces?
So again, in terms of the estimates that we're getting, we're doing about just under that, because we did about 6 million ounces as a country. Small scale did about 3.1 last year in 2025. Yeah. So we would be doing 2 point something, you know, which is a slight drop from what we did, you know, the previous year. And some of the challenges you would have is some of this encroachment, you know, that happens. So you take a mine like Asanko, for example, Tonto, you know, really at the eye of their mine, as you know, you have people encroaching within those spaces. You also have the challenges of the fact that some of the mines themselves are matured mines, and so there's some investments that have to go into it. You know, you take a mine like Obuasi, for example. There's a project that you're working on to be able to expand, you know, production. all of those things, take a while to come. And so because of all of that is the reason why you're not seeing, because you see
huge firms doing that.
You don't see. But again, you know that Cardinal Namdini in the north just came up out of stream. Newmont also was able to bring the Ahafo North mines coming. So as the days go by, and we're hoping that with all the things that we're doing so far as exploration is concerned, some of the new Azuma, will be building, their mines. If you take the issues around, and again, it's not only gold. Manganese, for example, we're seeing that it might be, they might be constant, but they also, there's some new finds that and they're working on all of them. We're hoping that would also be able to grow. We're also hoping that lithium, the agreement would be ratified, and then they might also take about 2 years to be able to get that.
As you try and draw the curtains down, Galamsey, we are still struggling to get around.
Oh, we're struggling. We're struggling.
What is happening?
We're struggling. I think that
How do we get around this challenge, Galamsey? The
minister is doing a good job with NIMOS and all of that. The funding that is required for NIMOS, it's important that the government gives the NIMOS that funding. You know that one of the things that when we met the CSOs, again, so this one I take my hat off, and I wear the hat of my being CSO.
Not as Chamber of Mines.
Not as Chamber of Mines. When we met His Excellency the President, one of the prescriptions that was given was the fact that we're going to get NIMOS to be stationed in some permanent place. It is important that His Excellency the President, the Minister of Finance, gives NIMOS that resources that are required to be able to do that. But let me tell you one of the things that aha moments I got. There's a conversation about Newmont, for example, is coming up with a model. The other mines coming up with a model of a model small-scale mine. And when we sat there and we looked at it, so in fighting Galamsey, it should not only be the stake. We should be able to produce. So government is talking about the responsible mining. There are some other things that needs to go with it. And so for us as an industry, council has approved for us to get a team together to put together a framework that would enable the small-scale mines to be able to do modeled small-scale mining. And so that when you do that, you are able to cut those who are involved in the small-scale mining from the organized criminals who are currently they are working for. When we are also partnering with entities like the World Gold Council and all of that. Currently, the processing that our small-scale miners are doing, the output that they are getting from that they can move from their 20% and all of that to about 70%.
Wow.
So what we want to do as an industry is to be able to put that framework together, together with government to make sure that this responsible mining thing that we want to do actually is effective. And so that we can even have those small-scale miners be able to produce responsible gold, be able to now become those who would guard against it. But we definitely, because as the coalition, we did some work in November and December. The level of turbidity is very high. The level of heavy metals that are in our water bodies are very high. The firefighters are still the arsonists. The politically exposed persons are still involved in the issues around Galamsey. And so we need to all work together, putting the stick in, putting the carrot in, to ensure that we are able to mine properly, save our water bodies, save our forest. You know that the LI on forest has been repealed, but there are still people in some of these forest mining. We need to also deal with the situation. And so let me commend the policeman, where very recently you saw the situation. In as much as my heart bleeds for that young man that was fired, you don't go attacking the police, going to take the weapon away from a policeman. We need to move away from the point where communities are attacking military people, because that's our last, area. Otherwise, once we leave there, it will become the way Boko Haram has.
Engineer, I appreciate your time so much. It looks like we need to do a part 2 of this as we look at development in the mining industry and engaging the chief executive of the Ghana Chamber of Mines. We look at rising prices of gold on the international market and whether government push to get more from the sector is justified or not. You've heard the argument from the chamber. I know the debate will still go on in your homes and your offices about how best can we get from the mining sector, looking at the rising prices of gold on the international market. My name is George Yafe. Have a great day. This is PM Express this edition.